Hello everybody. How are you guys doing? I hope you all are having an amazing trading week so far. My name is Ambrose Ebuka and I'm officially welcoming you guys to the Octa live trading session. Now, before I go into the details of what we have today for this session, you can go ahead and let me know in the chat your name and where you're watching me from. And you can also go ahead to let me know if this is your first time taking part in an Octa live trading session. Let me know in the chat. So in this live trading session, just like every other live trading session that I host on the Octa YouTube channel, we look at some of the ways that you can analyze the market. We also look at fundamental analysis, which is, looking at the economic events and its impact or its influence on prices, the charts. We'll also look at some of the ways you can open an order, talk about the steps to trading the market. I'll show you guys, the steps that I use. I like to call it the framework that I use to execute trades. And if you have any questions in the course of this session, you can always ask your questions in the chat. We're going to have like a Q&A session where I answer your questions, and I could also ask you guys questions. So it's important that you stick around till the end and don't just stick around, but pay attention. All right. Once again, if you're just joining, welcome to the Octa live trading session. My name is Ambrose Ebuka, and we're going to be, analyzing a few pairs, identifying some areas where we can execute trades. But before we do that, I'd like us to look at what we have today in the economic calendar. And it's very important because this is one of the major drivers of the market, major drivers of prices. All right. The economic stability or instability of a country would have a direct impact on the domestic currency of that country. All right. So looking at the economic calendar, first, one of the things you would notice is that it's filtered to only high impact events. And I always like to tell you guys that if you're a beginner trader, you can always use the advanced filter option, include medium and low impact events for the knowledge. But low impact and medium impact event, just as the name goes, would bring about, low impact or low volatility or medium volatility to the market. The high impact events have a high chance of bringing about high volatility to the market. Excuse me. And I also get some comments about some of the economic events are not showing on the Octa economic calendar. One other way that you can also take advantage of this calendar to view all the economic events happening for different currencies is to also check these boxes, right? For example, you can see that Finland is unchecked. I just checked it right now. South Korea as well, Netherlands, Argentina. So you can, I'm just going to uncheck this because I don't really look at these currencies. But if you want to get all the economic reports or events going on in these currencies like Sweden, Norway, Austria, you can always go ahead and check these boxes and scroll all the way down and click on apply filter. All right, apply filter. And again, if you apply filter for medium and low impact events, you'd see that medium and low impact events will be added, as you can see. And now you have a lot of economic events that you can learn from and just, observe, right? But I'll be sticking to the high impact events because, that's what I use and that's what I like to pay attention to. So I'm just going to go ahead and keep it at high impact events. Again, guys, if you have questions or instruments that you trade that you want me to analyze, please go ahead and let me know in the chat, because while I'm doing the analysis, I would also like to analyze some of your favorite pairs as well. Now, looking at the high impact events, we only have a few, about 6 high impact events today. And the first one would be the Australian trade balance month over month. Now, if you don't know what the Australian trade balance is, it's a metric that quantifies the disparity in value between products and services that are exported and imported. And as you can see, the most recent data indicates that the surplus for June, which is this month, 2024, was 6.548 billion Australian dollars. And this exceeds the forecast, which was at 5.5 billion, and also exceeds, the previous month data, which was at 5 billion Australian dollars. Now, a lot of times we tend to overlook economic reports or overlook, these events. Sometimes it can be ignorance. Sometimes we just don't want to look at it. We want to go straight to the chart and start buying or selling. And again, economic events have a direct impact on the domestic currency and just every currency, because what you're looking at with the economic events or economic calendar is you're trying to look out for strength and weakness in different countries, right? Which one is stronger, which one is weaker? Because if the economy is strong and the economy is doing well, it's going to have a positive impact on the domestic currency. In this case, let's say the Australian dollar, right? Let's say the Australian dollar, the economy is doing well. It's going to have a positive impact on the Australian dollar. And now you can start looking out for other currencies that are weak or probably stronger than the Australian dollar and just trade with that bias. Okay, so sometimes we just overlook trade balance, but it's important. It's a very important economic statistics for a number of reasons. It's a good economic health indicator because a positive trade balance, which we normally call surplus, is a common indicator of a robust economy. And this is because it shows that the nation exports more goods than it imports. Now, when you export more goods than you import, it results in a greater amount of foreign currency being brought in, and it contributes to the expansion of the GDP of that country. In this case, it's going to be GDP of Australia. It's also good for trade balance is also good for currency valuation. Like I said, it has a direct impact on the Australian dollar. Policy implications as well, because central banks and policymakers, they keep an eye and they pay close attention to the statistics that we have here in the trade balance so that they can make educated judgments regarding trade interest rates, tariffs, trade policies as well. So these are some of the reasons why trade balance is important. And generally, if you're trading just with technical analysis, oftentimes you could get caught in a spike, right? Most times this spike happens due to a news release. Now, if you're not informed beforehand, that's why sometimes you see a lot of traders do a proper and very clean, beautiful analysis, execute the trade, and before the trade goes into their direction, you just see a spike, boom, 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 and then it starts to go into the direction. And you say, oh, my stop loss was hit and the trade went into my direction. Sometimes it could be that an economic event was released that you were not aware of. And that's why I always urge traders, before you start trading, once you get into a trading day, don't get too excited to go to the charts. First, you have to look at the economic calendar to stay aware of the events happening that day and know if you should close your trades or adjust your trades accordingly. All right. We've also had retail sales. And one of the beautiful things that I love about the Octa economic calendar is that the reports are not just being provided to you like you have here, previous, forecast, actual. You can also see the definition of this economic event. So let's say I don't know what retail sales is, right? Assuming, and I'm using the Octa economic calendar for the first time. By the way, let me know in the chat, guys, if you use the Octa economic calendar. Let me know in the chat if you use the Octa economic calendar. And if you don't, that's fine. I'm just trying to show you how to use it. And hopefully you start to use it and implement that also, or combine that with your technical analysis as well. But let me know in the chat if you utilize the Octa economic calendar. So, assuming I don't know how to use this economic calendar and I just come in, I'm saying trade balance, I'm saying retail sales, I don't know what this is, right? I'm saying the actual, forecast, and previous. All I have to do is to click and you'd see the definition, what it is, and the important, well, every information here is important, but I find this more interesting, this last sentence, because the last sentence tells you what each report means, right? The last sentence tells you what each report means. And if you look here, you'd see generally a high reading is seen as bullish for the euro, while a low reading is seen as bearish. The same thing goes for main refinancing operations rates. You won't get that on policy statement because these are decisions where the European Central Bank or board members or even the governor of the European Central Bank just gives their stance and makes decision about monetary policy of the country. But again, they can be either hawkish or dovish. And if you look, you'd see a hawkish view is considered bullish for the euro, whereas a dovish view is considered bearish. So the definition is there, and also the impact is there. If the ECB, the European Central Bank, is hawkish, that can be bullish, or that's considered bullish for the euro. Now you know what to do. Now you're looking at possible strength of the euro, right? But again, you're not trading fundamental analysis. You're not trading this economic calendar in isolation. I know that you can get good biases from here. You can get good understanding of future price movements from the economic calendar, but you're not trading it in isolation. And what do I mean by that? You don't just get your idea from the economic calendar and go straight to your chart and, oh, euro is going to be strong, so let me just start buying euro. You do a combination with your technical and fundamental analysis. Again, you want to look out for the actual, because the actual tells you the report as it's been released, right? So if you look here, you'd see if a steady demand in exchange for Australian exports is seen, that would turn out to be positive. That will turn into a positive growth in the trade balance. And you can see that the previous was 5 billion Australian dollars, right? If the actual is 6.5, it means that it's positive. It means that there's a steady demand in exchange for Australian exports. And that will turn out to be what? Positive for the Australian dollars. All right, we're going to go to the charts right now and we'll look out for some areas where we can identify buy or sell opportunities. And in the meantime, go ahead and let me know in the charts what your favorite pairs are and what pairs you want me to analyze. Okay, I'm seeing, okay. So first, we're going to be looking at the dollar index, which is DXY. And the reason I like to start with the dollar index is because most of the currencies that I trade, or most of the currency pairs that I trade, are paired with the dollar index, right? Let's say GBP. GBP is paired with USD. Euro is paired with USD. Gold also paired with USD. All right. Give me a second, guys. All right. So first, I told you guys that we're going to look at some of the steps to executing trades. And it's important that you have a kind of framework to executing your trades. You don't just come into the charts and you're already clicking on buy and sell. And if these lines are confusing, don't worry. I'm going to explain it from the top and explain every single key level that we have here, every single line, so you understand why it's drawn and why it's important. Most of these lines were drawn just once and the market just came back to start retesting on the lines, right? And that's what the market likes to do. The market likes to move like a magnet. Why? Because every single candlestick you see on this chart is a reaction of traders, reaction of humans. And what do humans like to do? We like to repeat the same thing over and over again. It could be, it could take some time, but we eventually just like to repeat the same thing. All right. And that's why you see some price retest, breakout, comeback, retest, and just human trading. And yeah, quick definition of the dollar index. So If you don't know what the dollar index is, it's used by traders to measure the value of the US dollar against a basket of currencies that are used by US trade partners. Again, I mentioned these currencies: pounds, euro, Swiss franc, Swedish krona. These are some of the currencies that are being measured, or measured against the dollar value. All right, so the first thing on the framework is obviously to look at economic events, which we've already done. And again, we saw reports on euro, we saw on the Australian dollar, and let me just go back to the reports on the euro to show you guys something, right? So if you look at this report on the euro, you'd see that the forecast was 3.75 and the actual still came out to be 3.75. Same goes with this, unchanged, right? Now, if I go to the Euro USD chart, you'd see how the Euro market reacted to that news. Just give it a second to load. It's going to go in lower. Let's go to the 4-hour time frame. Okay, I'm seeing Emeka saying he wants me to review Euro USD. It's a good thing because that's what I'm doing. Let me confirm this time. And I also forgot to mention that, so very important, you have to align your time zone on the economic calendar with your time zone on the charts. And the reason for that is because these events are released at different times for different time zones, right? So this is being released by, or this was released by 1:15 in West Africa. But if you look at probably the Midway Island, it was released at 1 a.m., right? 1 a.m., not 1 p.m. So guys, always remember to adjust your time zone to fit into the actual time that you're on, so that you get the news at the correct time. So you don't start waiting for your news by 10 p.m. when it was already released. All right, so if I zoom in closely, what do you see? You see a spike, right? If you look here in this candlestick, let me just go to the 2 hours so that you guys can see it closely. A second. So obviously, if you look here, you'd see that neither the buyers or the sellers were able to take advantage of this candlestick. And that's what I said earlier with, trading economic events. You could conduct an analysis, and what do you see? You see your stop loss get taken out for the sellers, stop loss of the buyers get taken out as well. Because obviously, if you want to hop on buy trades here, your stop loss would be set at this previous swing around here, and then you see your stop loss get taken out. And for the buyers as well, previous high, which is here, and then you see your stop loss get taken out as well, and the market starts to trade in the middle. Oftentimes, you would see the market start to go in your initial direction, and it doesn't mean that the market is against you. It's just you're probably not aware of the economic events before it was released, and that's why it's important to check the economic calendar so you can stay updated on this news release. All right, so I'm just going to go back to the dollar index. Again, we're going to be looking at the dollar index from the higher time frame. There are a lot of expectations towards the dollar because we have non-farm payroll coming in tomorrow by 1:30 p.m. Nigerian time. And and the non-farm payroll is just a report that explains the employment or unemployment rate of the United States, right? We also have unemployment rates coming in tomorrow for Canada as well, and an ECB speech coming up tomorrow. Very important day for the dollar and the euro. So if you're going to be trading the dollar today, just be aware that during that time tomorrow, 1:30 p.m., there's expected to be a huge amount of volatility at that time, especially because from January up until April, we had bullish reports for the NFP, but in May we had a bearish report, and now it's highly anticipated. It's a highly anticipated economic event. Looking at the dollar index from the daily time frame, right, you can clearly see that we've been rejected from breaking above this point, and now we're trading to the downside, successfully broken below the 200 period moving average on the daily time frame. We've made a retest, and if you're familiar with breakouts and retests, you would know that if the dollar index continues to trade below this 200 period moving average, then we're bracing ourselves up for a downtrend. We can already see that. We can see that already. We can see that we have been rejected, and we're starting to trade below the 200 period moving average. If we successfully break below the 103, just going to call that 104 level or 104 price mark, then we're coming down here to make a retest in this zone. So that's why this zone has been highlighted, because it's a key zone, it's a significant level and an expected area that the dollar index would come to dance around and play around for a while before we get a bounce to the top side or a break below this trend line that we have here that has been drawn from August last year. Just going to zoom out so you guys can see. Actually, July last year, we had a breakout, but it was obviously a fake out because there's no follow-up on this. There's no follow-up on this break. We didn't have any sustained momentum for a retest down here. So we broke out, made a retest at this key level, and we pushed back up. And now what are we seeing the dollar index do? We're seeing the dollar index come down to make another retest at this trend line, right? But we can only be so sure when we have a break, or we can confirm that the dollar index would be coming down to trade around this zone if we have a break below this key level. I'm just going to go ahead and type that in the chart for you guys. Right, so if we get a sustained break below this level, a sustained break would mean that the dollar index would start to trade below this support. And if it trades below that support, it means that it would be trading below the 200 period moving average. And then you see the market starts to trade, and we just come back to make a retest at this trend line, or trade around this zone and come down here to make a retest. All right. But what would that mean? It will mean that the dollar is getting weaker and weaker. And if the dollar is getting weak, what are we doing with euro? We're buying euro, right? What are we doing with GBP? We're buying GBP. So let me know in the chart if you guys understood the dollar index analysis. I think I'll just go ahead and see if I can write out the framework for you guys. Because obviously, like I always say, there's a step to trading. And as you can see here, we have 6 steps to trading, right? Six frameworks. Yes, 6 steps under the framework. That's the right word. And I use these steps. That's why you can see it on my screen. First, I like to check the news, which we already did. And now we can see why, the dollar is beginning to lose some strength, added to the ECB stance on the interest rates. You can also see that as well. You can see that the dollar is also reacting to that. And also, like I said, tomorrow we're expecting reports on NFP and also a speech from the ECB as well. So the entire market is just anticipating that moment. I don't expect any volatile movement until tomorrow. I think the market is just going to be dancing around until tomorrow. But again, second step would be to understand market structure, right? And by understanding market structure, it's just, in simple terms, you being able to come into the market and kind of perceive the market, right? Identify the trend. Where is this market going to? What are some of the key levels, which are some of the support and resistance or supply and demand zones? What are some of the key levels that the market could retest, has retested in the past, and could make a potential retest in the future? When you identify these key levels, then identify your entry points. Now, your entry points can be, your entry points can be candlestick break out of the 200 period moving average or bounce, but the last confirmation for an entry should be candlestick momentum, right? You want to look out for momentum. If you have a clear trend, if you have multiple confluences, your indicators are giving you a buy, your trend is giving you a buy, support and resistance is giving you a buy, whatever it is, the candlestick has to be the final thing to say, okay, this is momentum, it is time to buy. If you don't get that confirmation from your candlestick, then it would just be a bit risky to hop on that trade. All right. And exits. Before you enter a trade, you should already have a predetermined exit. Where do you want to exit this trade? A lot of times, traders use the amount they make from a trade to determine their exit. So if I'm going into a trade now and I'm like, well, I want to make $200 on this trade, right? So when I make $200, then I'm going to exit. Now, I could see a clear exit opportunity. But because I haven't made $200, I'll just continue to stay on the trade. And what happens? You get to see reversals and the market just goes down to hit my stop loss. So predetermine your exits before you execute a trade, right? And finally, risk management. How much do you want to risk on that trade and how much do you want to make in profit from that trade? It's good to have a moderate risk to reward ratio. What do I mean by that? If you're risking 1%, then at least you should be going for 1% in profit at the very least. If you're risking 5%, you shouldn't be going for 1%, and that's not a moderate risk to reward ratio. Your risk should always be either the same as your reward or advisably lesser than your reward rather. So your risk should be lesser than your reward or the same with your reward. Advisably lesser, right? So if you haven't already, you can take a screenshot of these steps, because most of the analysis that I do and most of the analysis that I have done, if you check the videos on the Octa Broker YouTube channel, we're done using these steps. All right. Okay, so someone in the comment is talking about no key levels, no entry points, and how day trading is made to make you trade every day and provide liquidity for market makers. The beautiful thing I love about trading is that you get to choose what style of trader you are, you know? So you don't necessarily need to be a day trader. You can be a swing trader. You can be a position trader. If you choose to be a day trader, it means that there is a style to day trading. A day trader looks at closing their positions within the day, but no one comes to you to, you're not obligated to be a day trader, you know, but if you choose to be a day trader, then as a day trader, you're closing your trades or you're looking to close your trades within the day. All right. A swing trader looks at weeks, probably a month. Position trader looks at months and years. But if you're going to be a day trader, there is a style to day trading. There are strategies to day trading. That's why it's called day trading. You're looking at the lower time frames, even though you can use the higher time frames to determine overall market movement. As a day trader, the lower time frame is your friend, right? Because you're looking to close your trades within the day. But the point I'm trying to make is that you have an option to be a swing trader, right? So you're not obliged to just choose day trading. But if you're going to choose day trading, then because you're a day trader, you have to close your trades within the day. And because you have to close your trades within the day, then you have to look at the lower time frames. All right. So I think we're done with the dollar index. I'm going to move over to, because I see Euro USD and GBP USD on the chart. So just look at GBP USD. Again, on the dollar, I'm still expecting further downside. I'll be sure that. Let me just go back to the dollar so I can use the charts to show you guys what I'm talking about. Let's give that a second, guys. Let's give that a second. So again, right, we're back here to the dollar. Just wanted to do a recap on, my bias on the dollar, right? Now, if you're in the Octa Nigeria Telegram chat, right, I think the link is going to be in the description, or it's also going to be in the chat. You can join that. You'd see that we already made this analysis that the market was going to bounce around here and push to this zone. The market has done the bounce, and we're expecting a break to the downside to get into this zone. And one of the ways that you can make this analysis is to use these key levels, is to understand the dynamics of the market, because when you understand the dynamics of the market using these key levels and significant points, then you know what to expect. If you look towards your left, which obviously the left is what we call historical price data, you can see that a lot of times the market respects these key levels, right? Multiple times. As you can see. So what we're looking out for on the dollar index is a break to the downside. If you get a break to the downside, then that would signify a more weak dollar, and we can go ahead to sell the dollar across other major currencies that are paired with the dollar. A nice break below 104 level would signify that we're coming down to trade in this zone, right? And if we keep pushing down, let's say we push down below this trend line and we sustain that to the downside, then again, still more bearish indication on the US dollar. So what we're basically doing is looking out for zones, key zones, and with zone trading, it involves looking out for or identifying specific price zones on your chart where the price is likely to react or reverse. Now, by reacting, it means that the price must have acted on this level in the past and is coming to react or reverse from that level. Now, these zones are typically based on historical support and resistance like you have here. You can see how the market danced around this level for a bit. You can also see that we have this trend line that has been connected across the swing lows of this range. We had a break. It danced back in to make retest that resistance. We didn't sustain a break to the upside. We came back down to retest support. Came back down to retest this support again. It danced around before we pushed back to break below this support trend line that we have all the way from October. So one of the beautiful things that you would notice here is that the market all through this point moved in a magnet, respected most of the key levels from the left hand side, as you can see, respected here, here, broke below from this point, respected but couldn't sustain that bounce. And what happened? It broke below, came back up to make a retest. Well, came back down, then came back up to make a retest and danced around a bit. So you can see that there's a lot of drama around all these key levels. And one of the rules of trading zones, or one of the rules of zone trading, is you're reacting to the market, right? The concept is to focus on trading opportunities within the predefined zones rather than trying to predict the price movements outside of them. So when the market get into these zones, you want to see what the market does. Are we getting a bounce? Are we getting a break? You don't want to try to be ahead of the market. So you want to trade, you want to react to what the market does. Oh, we have an engulfing candlestick. We have bullish momentum. We have this, we have that. We have multiple confluences, and we are trading in accordance with that confluence. So what I'm trying to say is you don't just buy at every support or sell at every resistance. You have to see the market show you bearish momentum or bullish momentum. Use a minimal risk and you hop into the trade. All right, so we're looking at GBP USD from the daily time frame. Just going to zoom in a little bit. And you can see that from this support, the market, the GBP USD market, has found a way to rally all the way to this resistance. And what are we doing? What are we doing here? We're respecting the resistance, right? You see the first, I'm going to zoom in again. All right, let's use the arrow to a second. Just going to zoom out a bit. So what I'm trying to do is to identify and, you know, show you guys how many times, and this is also why this is a key level, a significant zone on the pound dollar market, right? It's visible. Okay, you can see how many times that this market came to retest this zone. 1, 2, 3, 4, 5. Fake out here. Didn't sustain that break above. That's 6, 7, 8. And now we're back for the 9th time. Usually, if we had like a high impact news released right now, then you'd either see like a spike to the downside or a spike out of this key level, right? But again, the market is dancing around here because obviously we are looking out for NFP tomorrow. We're looking out for major events tomorrow. And secondly, this is a key level. It's not just going to go ahead and just break out like that without any reason in terms of volatile reason or volatile impact. All right, as you can see here, it didn't just break out. Respected, broke out, didn't sustain. Let's zoom in. Trying to see if I can figure out the time because this was on a Friday. Okay. Broke out again, but couldn't sustain that break above. Pulled back in, retest, another retest, right? So this is a key level on the pound dollar market. But I know by tomorrow, because of the events that we're having, we would see either a bounce or a break to the upside. I am expecting a break because the dollar is weak right now. And because the dollar is weak, if we continue to see more downside movement on the dollar tomorrow, then GBP USD is obviously going to break out of here. We've already created new highs on this point. It's going to break out and try to retest 128.90 levels. So I'm just going to take out all these arrows because it's making the chart look a bit messy. But again, just to summarize the GBP USD analysis, we are trading at a key level, a resistance, a significant resistance level. As you can see, we had multiple retests in the past. And again, if I just extend this to the left, you still see multiple retests on this side, you know, and this one as well. But this is very important for the GBP USD market, and a sustained break above it would mean that the pound dollar would trend upwards for a while, trend upwards to get to this level. and make a retest here. Let's see how many pips that would be. That'll be about 80 to 90 pips. Not that much, but again, if we break above it, then we're coming up to the next swing. So this is not really a good time to start trading GBP USD because we're not seeing any significant momentum on this key level. As a matter of fact, the most recent candlestick we're seeing here is a doji candlestick. And if you understand how doji works, dojis are indecision candlesticks, right? Indecision candlesticks. So it's not really ideal to just hop on a trade. Let's say you want to hop on a sell because you see that the market has rejected here, and then you just start to hop on a sell in hopes that the market also rejects and pushes down below this resistance level. No, we want to see either a next bearish momentum candlestick that closes below this doji, the follow-up, which we can hop on, or a sustained break that closes above this previous bearish candlestick that we have here. Because oftentimes what the market does is we break out just like you have here. We break out, take out some stop losses, take out some people that hopped into early, push them back downwards. In a trade like this, obviously after this breakout, there is no follow-up, right? Usually when we have a breakout, we wait for a retest to the top side, right? Or a slight pullback and another bullish momentum. That's one of the comfortable ways to trade a breakout chart. But that's what we'll be looking out for on the pound dollar market. So we need to have a breakout to the top side and a slight pullback or a retest that we can hop on, or we see the market push back down and give us bearish momentum signs. We need, for a sell, we need to close below the doji and follow that up. And then we can start to look for sell opportunities. All right, I'm seeing your questions in the chat, so I'm just going to go ahead and take some of them. How about Fibonacci? How do you use the Fibonacci to know entry point? So Fibonacci is mostly used in a trending market, right? You just draw it. Let me show you. Let's go to the 4-hour so we can see it clear. Let's give that a second, please. All right. So usually what people do with the Fibonacci is they draw from, okay, let me just zoom out and identify an area where we can use that, right? Okay. And this is why I always tell you guys that regardless of the confluence that you have, your confirmation should be candlestick momentum, right? Because a lot of times you can draw from so many swings to the next swing, and the market gets to your Fibonacci level and just starts to push above it. So one of the basic and simplest way to use the Fibonacci is when you have an impulsive move and you see the market push back down to create a low, just like you have here, right? So if you're a beginner, pay attention because this is one of the basic and simplest way to use the Fibonacci, right? So you have the push to the top side, retest at resistance. This is resistance level here. And you see that pull back to the downside. The market has created a low and the market is trending upwards. Now the idea is we have this push, we have this retest, we have this momentum, bearish momentum. We want to see an area where a very comfortable area where we can trade the GBP USD market to the downside, because we've had bearish momentum, slight pullback. Now we're looking out for, oh, when is the next pullback going to come? When is the next downside movement going to come? Rather, not pullback, because we already have the pullback, right? Now, most people like to use the 61.8 It's called the golden ratio, right? And 78.6 as well. I prefer to use 78.6. Most times it doesn't get to this point, but I'm more comfortable when it gets to 78.6. Most people like to use this 61.8. You draw from here to the lowest point, which is going to be the lows that was created from the push to the downside, and then the market starts to rally its way to the top. And now you want to look out for, oh, I want to hop into the next push to the downside. Most traders eye the 61.8 extension, rather ratio, right? Let me just increase that for you guys to see clearly. Oh, that's too much. Okay, change the color. Yeah, because most times with Fibonacci, when it gets to 61.8, then you start to see rejection. Sometimes it gets to 78.6, you see massive rejection, and it pushes all the way to the downside, and then you start to take out profits from 38.2 and 0. But if I'm using the Fibonacci, I prefer to, I mean, at 61.8, I start to get ready, maybe open small positions, but I prefer to go in from 78.6. And again, you want to see the market actually pull back, right? So let's say you have something like this. I have no idea why that's taking so long to come up. Okay. So let's say you have something like this, right? So we are at 50.0 and you see, nope. Okay. A bit slow, but yeah. And you see the market gets to 61.8. Now, you have to first see this pullback. You have to first see a bearish momentum. You don't just start opening sell positions when the market is at 61.8. You have to first see momentum, probably another pullback to retest that, a rejection and to the downside, or momentum to the downside, a break below that consolidation that you would have, and then you start to trade, right? If you just keep entering sell positions at every 61.8 ratio point or extension point, then you could be setting yourself up for a certain amount of drawdown that you would not be prepared for. So final confirmation comes from the candlestick. All right, guys, if you have any questions, we've come to the Q&A session. So if you have any questions, you can go ahead and ask me in the chat. Meanwhile, I'm just gonna ask you guys one or two questions to see if you've been following. If you made it this far, awesome, you're amazing. And I'm just gonna go ahead and ask you guys some questions and see if you have been following, right? So first question, in the framework, right, we have steps to trading, we have a framework. The first thing in the framework, which is going to serve as a hint for you, but yeah, I'll just give it out. The first thing in the framework is to check the news. Now, what comes after checking the news? If you know what that is, let me know in the chat. If you know what comes after checking the news, right? If you know what comes after checking the news in the framework or steps to trading, let me know in the chat. There are 6 steps. Check the news. What comes next? Okay, I see someone asking about, I think this is going to be the last question that I will take. Someone is asking about gold. Is the price ready for 2,400 or is it going down from here? Well, I think we'll be more certain tomorrow. after the NFP reports, right? Because today gold is basically dancing around the 2,380 zone, and you can also call this, yeah, successfully broken above this level. Let me just extend this. I didn't. You see the beauty of key levels, right? Breakout, retest, boom, to the top side. So key levels are important with trading. It's clear. And even this level that the market is retesting is also a key level. I'm just going to increase the line so you guys can see clearly. If you look from this point, retest, breakout, retest, and just come back to retest even twice. Let's made these highs twice today. I mean, yesterday and today. So with gold, I think tomorrow would see if, I mean, gold is serving as a safe haven now, because if you look at, I mean, there are a lot of things going on. The Bank of Canada on Wednesday lowered its benchmark rate for the first time in 4 years. ECB is also expected to cut their interest rate as well for the first time since March in 2016. And this was finalized in the discussion today. If you guys recall, we had an ECB meeting today. And everybody is still, looking out for the Federal Reserve, an interest rate cut from the Federal Reserve. So these are all showing slow signs of a slowdown in the US economy. We have geopolitical tensions that are stemming from the ongoing conflicts in the Middle East. Everything just draws down to gold being a safe haven for investors right now. So my bias on gold is a bit mixed until tomorrow. Olawale says, know the market structure, understand market structure. That's correct. That's the second thing you want to do after checking the news. So it's not check the news and start trading, but check the news, come to the chart, understand the structure of the market so that you can identify the best possible price of the best and comfortable price that you should execute your buy or sell trades. All right, guys, it has been an amazing live trading session with you all. Remember, if you want to get this analysis even before I come live on the Octa YouTube channel, you can join the Octa Nigeria Telegram chat. Analysis are being posted there every day, trade ideas as well, and a lot of other information, educational resources, a lot of tips that can help improve your trading activities. You can also get to connect with like-minded traders and be a part of a global trading community. So do well to join the Octa Nigeria Telegram chat, get most of this analysis and get my understanding of the market even before I come on live. So if I come live here, it's going to be like a revision for you. And yeah, take advantage of that and also the trade ideas and some of the educational resources that is being posted in the Octa Nigeria Telegram chat. The link is going to be in the chat and also in the description. So join and I'll see you guys there. For now, it's goodbye from me on